Hey folks, Chris here from LazyFA.com. I wanted to do a re-recording of last night's video because we didn't capture the live stream for whatever reason. Something got messed up with the recording. So I'm re-recording this, all the same slides, all the same information. We obviously won't have the questions and answers, but I do remember a couple of them, so I will address those at the end. But I do want to go through all the same information, so I'm just going to go through the exact same slides and the exact same presentation that we did last night, and we'll look at a few things to help you understand Form 4 SEC filings, which are insider ownership changes. Before we get into it, let's talk a little bit about the audience for this talk. This is going to be geared primarily towards long-term investors that are wishing to track the insiders of companies that they own in order to identify fundamental concerns. So primarily, this information is going to be useful for people that are tracking the insiders of, looking for big buys and big insider sales in order to identify fundamental issues with the companies that they hold for long-term investments. Short-term traders, however, that are attempting to profit off of large or unexpected insider transactions might also find this information useful. So sometimes you'll see an insider report, a big transaction or a big series of transactions, and they all come public with a series of filings in one day. Sometimes that can really kick off a stock and make it move in a significant manner. So it is also useful for short-term traders, but the primary audience for this is going to be long-term investors. With that said, I also want to just point out that this is not a recommendation to buy or sell anything. I am not a financial advisor. As I say in all my live streams, if you take anything away from this, please do your own due diligence, do your own research before you buy or sell anything. So that's that. That's the audience. There are three types of insider ownership filings, and the three types are the Form 3, Form 4, and Form 5. And they're all filed pretty much in order. The Form 3 is going to be the initial statement of ownership. The Form 4 represents changes in ownership, and that must be filed within 2 days of whenever the insider transaction happens. So anytime an insider buys or sells stock, exercises options, converts restricted stock units, anything like that, any kind of change in their ownership stake of the company, they have to file a Form 4 within 2 days of that transaction. However, all of that said, there are certain situations where the insider will have some sort of a delayed disclosure of that change in ownership. They'll have either an exemption or some type of a situation that allows them to not file right away. And those delayed disclosures of changes in ownership are filed on Form 5s. So these are all insider ownership filings. They're all intended to protect investors and to prevent insider trading. And if you're interested in seeing the SEC's fast answers or fast definitions of these, there's a link here on the screen. And also I'll put the link to these slides in the description of the video. So you can get that from there if you want to look up some more information. All right, so three types of filings. We're going to focus primarily on the Form 4, which is laid out into four main sections. The top section of the Form 4, and we will look at some examples of this in a second. Actually, let's just look at a blank one right now. So these are laid out in four primary sections. You have this top section, which is boxes 1 through 6, which contains all of the information about the insider that's making the transaction, the company information, so the company that they work for, and their filing method. So on this form, you see these boxes at the top here, boxes 1 through 6, this top section. This is all the information about the insider, their company, and how they are actually filing the form. So that's the first main section of a Form 4 filing. The second main section is called the non-derivative securities table. And non-derivative securities are things like stocks. So derivative securities are things that are derivatives of stocks. So restricted stock units, other types of units that might be created by the company when they do their IPO, stock options, director stock options, all of those kinds of things. Those are derivative securities, whereas non-derivative securities are the actual stock. So those are the actual shares of company stock. So table 1 on this form 4, this section here, so table 1 has 6 or 7 boxes in it, and we'll go through what each one of these means. But this is for derivative securities. And then the next major section is table 2, which is that's the non-derivative securities section. And then table 2 is the derivative securities transactions. And that is down here in the blank one, it's on page 2. In a filled out form, it'll usually all be one page. So those are the first 3 sections. And then at the bottom, you have a section for footnotes and remarks, which will contain additional details about each transaction. So this will give you information like, was this part of an automated stock selling plan called a 10b5-1? Was it part of the officer or the director's compensation package? Were these open sales? Were they sent into a trust? Or were they sold directly into the market? So there's little footnotes about each individual transaction that happens. So you can read those footnotes to get more information about the transactions. I've also put a link here to the instructions for the Form 4, so you can take a look at that if you want. It's sort of like filling out a tax form, and the instructions are not too bad. They're 9 or 10 pages long, but the primary thing that I'm interested in on the instructions, and what we're going to mostly focus on tonight, is instruction 8, which is the transaction codes. So these transaction codes will tell you specifically what type of transaction it was, and we'll look more in detail at that in just a second. So that is the layout of a Form 4 filing. And now what we're going to do is look through 3 examples of Form 4 filings, ranging from pretty simple to more complex. And the first one is a pretty simple one. All of these filings are from directors or insiders for Apple, just because Apple's usually an easy company to find, these types of filings for. And they usually have, good information on them because Apple's a well-known company and there's usually a lot of them. So Apple's a good example for identifying this kind of information, but you'll see the same stuff on any other company as well. So the first one here was Chris Kondo. He's the principal accounting officer for Apple, and he made a transaction on May 8th, 2020, which was a direct open market sale of 4,491 shares between 305.41 and 305.63. So this is the actual filing, and I'll show you how to find these if you're not familiar with how to find them. To get a Form 4, you just go to sec.gov, click on Company Filings, and then you can put in your ticker symbol here, and you can either type in Form 4 here. You actually have to type, I think, just 4, or like a 4 and a space in order to eliminate the 424Bs. I don't actually know if there's a way to get just Form 4s by doing it this way. I wonder if it'll actually, if I do Form 4. Yeah, see, so because there's another type of filing called 424Bs, just typing in 4 is actually not going to work. But what you can do is only ownership here and click on search, and that'll show you all Forms 3, 4, and 5. So there's a lot for Apple, so I just picked the first 3 here, which we looked at last night. And this first one is the one that we're looking at right now. So just set it on owner, click search, click the document, and that is exactly where we are right now in this link. So the first one is a HTML version. The second link here is an XML version. And the XML version is useful if you're doing things like parsing this data with some kind of a coding language like Python or some other programming language. If you're doing programmatic stuff with these filings, this is a standardized way to look at them. So this can be useful for technical people, for coders and developers. And the other one, which is what we're going to focus on, is just a straight up HTML version. All right. So as I said, right, boxes 1 through 6 have all the information about the reporting person. If you click on this person's name, it will also open up all of their filings, whether they're Form 3s and 4s or if there are other types of filings by that individual. They will all be shown by clicking on the person's name. So this is boxes 1 through 6. the information about the person, the company that they work for, when the transaction occurred, the earliest date that the transaction occurred, and then over here you have their title and how they're filing. So in this case, the form was filed by one reporting person. Sometimes it'll be more than one person that's filing the form. All right, so now in this one, it's a very straightforward transaction because the only thing that happened was one transaction of common stock, which was code S, which if you look in the instructions, is an open market or private sale of non-derivative or derivative securities. So this is an open market disposition. In other words, he disposed of 4,491 shares at an average price of $305.62. And you'll see if you look closely, there's a little 1 right here, which indicates that there's a footnote at the bottom, and you can see they're numbered down here in green. This is the footnotes and the remarks section that I addressed in the last slide. So in this case, the only thing that this is showing you is just that the transaction was executed in multiple trades because he did sell 4,491 shares. So they weren't all executed exactly at 305.62. That's the average price or the maximum price. And the real range of prices was from 305.41.23 to 305.62.50. And you can see the price reported above reflects the weighted average sale price. So this 305.62 is the average of all of his transactions. And this is significant because sometimes these insiders will be selling, 100,000 or 500,000 or 1 million shares, and they're obviously not going to get all of those shares at the same price. So it makes sense to average out those share prices and put the average price in the price box, and then they put a footnote telling you that you can get the real prices if you request them. So the reporting person hereby undertakes to provide full information regarding the number of shares and all the prices upon request of the SEC staff, Apple, or a security holder of Apple. So if you're a security holder, you can get this information if you want it. So this is a pretty straightforward transaction, just a sale of 4,491 shares, and box 5 here shows the number of shares that are owned after that transaction. So he's got 7,370 shares left as of the date of this filing. Box 6 is the ownership type. So in this case, it's direct ownership, meaning he owned those shares himself. If it were indirect, they might be owned by a trust or some other type of business that he runs, or they might be owned by his spouse or some other sort of indirect ownership. So that's what the ownership box is for. And then box 7 will have the nature of the indirect ownership if it is indirect here in box 6. So pretty straightforward. This one is really easy to understand, and we're going to build up from here. So that is Chris Kondo, direct open market sale of 4,491 shares, code S, just a straight up sale in the open market. The second example we're going to look at is Andrea Jung, and she is a director of Apple, and this transaction occurred on April 28th of 2020. And in this case, there were two different types of transactions. One of them was a disposal or a disposition of 9,590 stock options, and the other one was the acquisition of 9,590 shares at the exercise price of the options. And this one was also a little bit more complex because she didn't just directly sell them into the market. She actually placed them into a grantor retained annuity trust, which is a sort of a trust fund. And we'll look at that and how that's indicated on the form in 1 second here. So you click that, go to the HTML version. Again, at the top, you've got all of her information, the company she works for. She's a director, filed by one person. And then we have the two tables here, non-derivative and derivative. Now, interestingly, if I see something in the derivative securities transaction box, I usually start there because a lot of times what you'll see is these directors and the insiders will convert their stock options or restricted stock units or some other thing that they own as an insider of the company. They convert those into shares, and then they end up as an acquisition in the first table. So you don't necessarily want to read this top to bottom. You actually have to go bottom to top in a lot of cases. So pay attention to whether these are acquired or disposed of, because that will tell you what's really going on. In this case, you can see that she had the right to buy. She had some director stock options, which give her the right to buy some shares of Apple at $48.94.57. And I don't know where they came up with this price, but I'm sure it's part of her compensation package or something that she bought a long time ago or something like that. But either way, she has some director stock options which give her the right to buy Apple at $48.94. And you can see they were initially exercisable on February 23rd, 2011, but they expire in February 23rd, 2021. So they're getting close to expiry. It looks like they had a 10-year expiration date, but that was the first transaction. So this code M here, transaction code M, shows us that it was a conversion. If we look in the Form 4 instructions here, exercise or conversion of derivative security exempted pursuant to Rule 16b-3. I don't know all the inner workings of Rule 16b-3, but I do know that code M is an exercise or a conversion of a derivative security into an actual non-derivative security. So that's what happened here, and that's why you see disposal of 9,590 shares here, and then the acquisition of 9,590 shares in the Table 1 non-derivative securities. And you can see here the nature of ownership was indirect, and the nature of that indirect ownership is by grat. So basically what she did was she put them into this grantor retained annuity trust, which is disclosed in the footnotes, of which she is the sole trustee and the sole annuitant. So this is a method of estate planning. This grantor retained annuity trust just allows these directors that have a whole bunch of money and they have a big estate, they put all of this stuff into a trust fund, which then pays out an annuity, and then the beneficiaries of the grat, whenever that person passes it on through whatever means, whether they die or it just gets passed on for some other reason, then it saves the beneficiary some tax dollars. So that's the reason that these are set up, and you'll see this a lot. The insiders putting their shares or their value of those shares into a gratuity or a gratuity trust or something like that. Sorry, an annuity trust. So that's what is going on here. So a little bit more complicated, but still fairly simple to understand. One thing you can see here is that in box 7, they were converted into common stock. So the price of the derivative security itself was 0. So she didn't pay anything for these options. They were most likely given to her as part of her compensation package. But she did directly own those, and she now has none left. So that particular director stock option is gone, converted into shares, put into her annuity trust, and that is what this Form 4 filing represents. So that's number 2. Number 3 was by Deidre O'Brien, who is the Senior Vice President of Apple, and it occurred over the course of 2 days. This is a conversion of what are called RSUs, or restricted stock units, which are sort of like an option, but they're basically just it's a security that is only allowed to be converted into an actual share of stock after a certain period of time. And you'll note that the slide here says via a 10b5-1 plan. I alluded to that in the beginning, but a 10b5-1 plan is basically a automated plan that the company sets up for the director or the insider when they are hired. And that allows them to systematically over time sell off their stock without triggering any allegations of insider trading or looking suspicious in any way. They set these all up when they're hired so that there's no question that they are not, dumping before earnings in order to take profits or something like that. It's all automated, and that is the reason that they set up those plans. So what happened in this case is Deidre converted all of those RSUs into shares of stock, and then she disposed of those shares of stock at the same time. So effectively exercised her options or converted her RSUs and then sold the stock for cash. All right, so you can see that this form looks a little bit more complex than the other one, but again, because there are derivative securities, I'm going to start in that table. And the other thing that you can do is start with the earliest date. Usually if there's derivatives involved, the date in the derivatives table is going to be earlier than the date in the non-derivatives. But, just start with pay attention to the date. Usually you're going to start with the derivative securities if they are disposing of derivatives. But every once in a while you'll see a director or an insider that will both acquire some options or some RSUs and at the same time acquire some stock or dispose of stock while also disposing of RSUs or stock options. So you do really have to pay attention to whether they are acquired or disposed in order to get a good understanding of what is really going on. In this case, even though there's a lot on this form, it's actually pretty easy to understand what happened. It's just that there were a lot of these RSUs, and so they were done in multiple transactions. And if you add these all up, you'll see that they add up to 16,634. So what this is her converting 16,500 RSUs into common stock, which price of derivative security has a footnote here, so let's take a look at what that is. This says each restricted stock unit represents the right to receive one share of common stock. The transaction represents the settlement of RSUs in shares of common stock on their scheduled vesting date. So you can see that there's, a bunch more footnotes in this particular form, but the underlying thing that happened here is she converted her RSUs into shares as part of her vesting plan for working at Apple. So we have this conversion, disposal of all of these shares in the D box here, and then the same thing at the top. You have an acquisition of all of those shares, so 16,634, which have that same code M that we saw in the last Form 4 filing, which again is an exercise or conversion of derivative security exempted pursuant to Rule 16b-3. So again, we have a conversion of RSUs into common stock. And this code F here is related to taxes. If you look in the instructions, it says that it's a payment of exercise price or tax liability by either delivering or withholding securities. So basically what Apple does is when one of their directors exercises or converts these RSUs into actual shares, in order to take care of the tax liability for them, they withhold a percentage of those shares in order to cover what they would owe in taxes. And that's what this code F is. So you'll see this sort of sequence a lot where you have code M in the derivatives table, then you have a code M here with an acquisition in the non-derivatives table, and then you have an immediate code F disposing of, 30 or 40% of the shares in order to cover the tax liability. So that is what that code is. And the rest of these are just simple, regular old open market sales. So you start with 16,634, 7,500 of them disappear to the tax man, and then you have about 5,000 sold there, and another 4,000 sold there. So pretty straightforward what's going on here. And again, you'll see that these all have footnotes 5, 6, 7, and 8. Same thing that we saw in the previous one. All of these footnotes are just telling you that these transactions occurred in a range of prices. So that's that. And then footnotes 9, 10, and 11 are from over here in the derivatives table, box 6, related to the exercisable and expiration date on those RSUs. And it tells you a little bit about when they were granted, how they vest, and some more information about exactly what those are. So this is part of her compensation package. And the one thing that I did want to point out, which I did in the slide, is if you look, where is footnote 4? So these sales here of common stock, so all the ones that have code S, have that footnote 4, pointing out that this transaction was made pursuant to a Rule 10b5-1 trading plan adopted by the reporting person on May 31st, 2019. So this is a relatively straightforward situation here where she has set up a 10b5 trading plan. She was probably awarded these RSUs on or around the 31st of May 2019 for whatever reason, maybe as a bonus or something like that. But she has a 10b5-1 plan set up so that she can continue to sell those off and take profits on them without raising any suspicions about being an insider trader or doing anything illegal. So that's that. Form 4 filings are fairly straightforward and pretty easy to understand. But I did want to re-record this because, like I said, we lost the recording from last night, but it was a pretty quick and easy presentation to re-record, and hopefully it'll still be helpful. With all that said, one thing that did come up last night, which I thought was a really good point, was someone had said in the Q&A session that none of this stuff is really useful unless you look at it in context, right? In context with all of the other insiders and in context with the other transactions of that same insider. So keep that in mind as you look through Form 4 filings. Just because you see an insider selling stock doesn't necessarily mean that it's a bad thing. What matters more is looking at the overall picture of what the insiders are doing. And one good way to find that is to use something like FinViz. If you go to the Insider tab here, this is a listing of all of the insider transactions that have been reported within like the last couple of days. So this is a good way to kind of keep a bigger picture perspective on things. And then also if you go to any individual security, down at the bottom, there will also be a listing of all of the insiders and the transactions that they've made within the last few months or whatever. And I think you can click on each one of these in order to see their transactions as well, sort of like on the SEC website. So FinViz is really good for finding this stuff in the bigger picture. The other thing that you can do is look at it on a chart, like some sort of an insider ownership chart. We have a couple of them on LazyFA, but there's a number of different websites that you can use to look at a chart of insider ownership over time, which will give you more information. All right, so that's it. Pretty straightforward chat tonight. This is a fairly easy concept to understand. Form 4 filings are one of the easier SEC filings to grasp. So if you're looking for an easy way to get started in reading SEC filings, tracking insider ownership using Forms 3, 4, and 5 is a good way to do it. It's pretty simple to understand, and hopefully this video will help you to get there a little bit faster. So once again, thanks everybody for watching, and I will see you next time.